Hello guys, welcome back to a new YouTube video. So in this episode I want to show you a step-by-step on how I was able to make 5,000 US dollars by trading US30 for the first time. So if you're new around here, make sure to subscribe and let's get started with this video. This video is sponsored by Trader Central. Trader Central provides funding for traders. It provides both instant funded accounts and challenge funded accounts. So if you're a trader and you're looking for a pro firm to trade with, you're looking to trade with big numbers, check out Trader Central right now. Sign up right now with my link in description and get 30% off your first plan, guys. Let's go, Trader Central all the way. Guys, as you can see, these are my trades. These are my 5 running trades with US 30, as I told you. So I use the standard lot size, which is really big for such a pair. You know, this pair US 30 is so volatile. So I want to show you my chart and my entries before I jump onto the computer, onto the trading view, so that I can show you the strategy and analysis that I made to take this trade. So right now here you can see this is where the current market is. It has bounced off the trading my moving average, so it's going to give us another push to the downside. So this is my stop loss right here and this is my entry. So when I zoom in like this, some of you all may think I just jumped onto this trade, but I want to show you clearly where I took this trade. You see here, this is where I took this trade. When this market had when this candle went up here, then after we had rejection, you see all this was rejection this week, then market started dropping. So I took a perfect entry, but I want to show you how this happened. So this is what happened, guys. Let me show you in 1 minute time frame my entry before I jump into the trading view, so that I can show you why did I take this trade. So this is what happened, guys. On the 1 hour time frame, we had that candle. We had this the previous candle closing as a very big red candle, which shows much selling pressure. But then I knew this market would first start by going back up, by starting to go back up before it starts pulling back down. So I knew that market would reach here, then come back, then again come back here, then go down. So I took trades when market came back here because I knew this is going to be just a retracement. I used my Fibonacci and this is the level 38 to where market reversed from, and then again it came back here to retest the same level. So when market was here, I took 3 trades, and then when it came back here, I took another trade, another 2 trades, guys, and we had a drop. You see, we had a drop up to down here. It kept on dropping, so the more it dropped, I just kept on moving my stop loss to back to so that I don't make out any loss. So guys, right now let me jump onto the trading view and show you step by step on what analysis did I follow, on what analysis did I what confirmations and all that, guys. So let's switch to the trading view, guys. As you can see, this is my chart on trading view. As you can see, this is US 30 and this is my hour time frame. So as I showed you on the phone the trades I took, so I'm going to show you here step by step on how I took the trades and the position. So this was my entry here, this was my entry just here, this I'm going to name this green because this was my entry. Then my stop loss was here, just above here. Then I'm going to name this red. Then my target was 100 pips, but I wanted market to first move 50 pips, then I break even my trades or move my stop loss below my entry. So my take profit was around here. My take profit was around here. So this is my stop loss, my entry, and then my take profit was around here. Though when market moved 40 pips, then I moved my stop loss to break even, and I removed my take profit. So I let the trade run. The more it kept on going down, the more I stayed in the market, but I just kept on moving my stop loss. So this is what I based on, guys. I want you to look here. So I'm first going to remove these, then come back here. First draw out this small structure, here, and draw out this small structure here. So this is the small structure we had. Then what I did, I drew out where the market broke. I drew a horizontal line where the market broke, and you can see where the market broke, the trend line or the structure, that's where at the same time where the moving average crossed. So my moving average is a 50 EMA and a 21 EMA. So I'm going to draw here a horizontal line like that. So, and I'm going to draw another box here to act as a zone, something like this. So if you know about market structures, you know, when market breaks a certain zone, it has to come back to that zone. Or whenever we have this whenever we have these big such impulse moves, market has to do the same and cover up. So it has to cover up this space here. That's why market came back to this zone. So my goal, I wanted to take a trade when market comes back to this zone. So there are possibilities market would either keep on going down or reverse and go up. So what I did is, as I told you, I drew this horizontal line and this box here, and then I'm going to show you on the smaller time frame, on the 1 minute time frame. I want to show on the 1 minute time frame and show you how I took this trade. So I'm first going to zoom out and come this side. And come this side. Yeah, remember guys, this is the 1 minute time frame. This is the 1 minute time frame. I want to show you my entry on the smaller time frame so that you can see. So guys, I want you to look very clearly there. So I'm first going to remove this box that I've drawn. I'm first going to remove this box. So we had these two moves on the 1 hour time frame. You see it as a pullback, but you see we had market testing this zone, and remember this zone is the same zone that market broke here. It's the same zone that market broke here and went up. Guys, I want you to look very clearly. Look at this first, right? Let's first go back to history. You know, history keeps on repeating itself. History keeps on repeating itself. I want to go back here and see, guys, this is the 1 minute time frame. This is the 1 minute time frame. As you can see, market was here, just here. This is the zone that it broke. So I wanted market to come back to this same zone, and then I would take a trade after I see, immediately after I see a retest and then a rejection. So that's what happened on my current on before I took my trade. That's what I wanted to see as my confirmation before I took that trade. Let me first go back now to that same zone, just around here. As you can see, this is the zone. This is the zone, guys. You see, this is the zone. Market broke my zone. As you can see, it retested my zone and it kept on going down, but again it came back again to retest my zone to see if there is possibility of this market breaking this zone and going back up, but it refused. So what I did, I took my first trades here when market was just here, when it rejected this zone and we had this nice spinning top candle. So I took trades here, and then I didn't really know that if market would come back and retest again, but when again it came here and retested, I took more trades. Here, and then we had market dropping big time, guys. So let's go back. Let's jump back to the 1 hour time frame. You see how it looks like. This is the 1 hour time frame, guys. This is the 1 hour time frame. Let me zoom out. So this is the 1 hour time frame. So I want to show you that retest and rejection. Guys, I want you to look here clearly. me mark this zone here, guys. I want you to look here clearly. You see that? That's what I'm talking about. That is what I'm talking about, guys. As you can see, this right here is what I'm talking about. You see, this was the rejection where I've just marked this zone here. That was the rejection that I saw on the smaller time frames, and I was able to take those trades based off those the rejections. Then my risk management, I didn't want to lose so much money if market went the other way around, because you know this is US 30, guys. US 30 is a very volatile, it's a very volatile pair to trade. You get? So I took my trade here. So let me mark out my target. It was a short position, so my entry was just there, just here. This was my entry. Then my stop loss was, that was my entry. Then my stop loss was just here. Then my target was, yeah, my stop loss was just here before market moved to profits. Then my target was just a few pips here, as you can see. Not just a few pips, these were like so many pips, guys. So my target was that, as you can see, my target was just here. So now when my market moved to profits, I broke even like this. You see, now my stop loss is not above, it's now below like that. You see, now I just kept on moving my stop loss in. I just kept on bringing it back in. So I'm going to show what I mean. So my first stop loss was here, this then I'm going to mark this as my green color. Let's mark this as my green. This was my entry. Then my stop loss was here. Then when market moved to profits, right now you see market is still down here and I'm still holding these trades. I moved my stop loss, I bought it here to break even, so that when market reverses on me, I don't make any losses. Now that market has been moving to profits, deep profits, I moved my stop loss just here where market bounced off my moving average to keep on going down. So this is where my current stop loss is, guys. This is my current stop loss, as you can see. So guys, this is the way I was able to catch to make up this to make this money in the forex market, guys. This 5,000, it's almost clocking to 6,000, but we're just going to keep on holding. But if you see signs of reversal in the market, we shall close these trades, and we have already seen one sign of reversal. I'm going to add the RSI now and you see what I'm talking about. So this is the RSI. So we see divergency here. We see divergency here. So guys, this is the sign of reversal I was showing you. Right here, we had divergency. So if you know about divergence is just a sign of reversal. Yeah, it's a sign of reversal. So if I see more signs of reversal, I'm just going to close this trade and come out with those huge amounts in profits. So guys, this was a very simple strategy. I mean, this was a simple way, and yeah, I applied some strategy, moving average, break and retest. I just combined some of those, and I had good entries, sniper entries on the smaller time frames. I discovered the structures on bigger time frames and took trades on the smaller time frames, guys. So if you enjoyed this video, make sure to subscribe, and don't forget to share with all your friends. Turn on your notification. Don't miss out on our weekly videos, and don't forget, if you want to get funded right now, check out Traders Central. Link is in my bio. Sign up with my link and get 30% off your first trades. See you guys.